Hey traders, in today's video, I'm going to be introducing Mitch Firestone, my business partner, went through some trading opportunities in Tesla. If you guys don't know, Tesla's been beat up quite a bit here and there and then recovered. So getting a lot of questions from my community about how to take advantage or how to stay out of bad trades. So what I want to do is in this, it's using a simple decision-making framework, okay? You can apply immediately to your own trades. It doesn't just work for Tesla. It works for any symbol you pop up here, right? Now, if some garbage penny stock, but actually still kind of works. But if you trade Forex, if you trade Apple, whatever symbol you pop up, you use the same framework that we do here on that symbol. Now, in the video, Mitch is just going to go through Tesla because there's some great trading knowledge. One of our students has been with us not very long, but just getting real results like very quickly. Posted a chart and wanted some feedback during one of our live member calls. So wanted to share that with you guys because Mitch went through the analysis and you could use it for yourself. If you've ever felt like overwhelmed by conflicting signals or unsure of when to either enter or when to exit, this will really help cut through the noise, and it'll make this way you can make clear, confident decisions is really what I want you to be able to do. A lot of traders get stuck overanalyzing, second guessing their moves. Leads to hesitation and just missed opportunities or bigger losses than they should take. But with the right decision-making process, whether you're using it as a filter or just when to enter, you can simplify that same process and focus on just the best trading opportunities. So I want you to go ahead, stay in another 10 seconds, I'll be out of here, turn things over to Mitch, he'll go through the analysis. But if you are ready to trade with more confidence and less frustration, stick around to the end and then go into the description. Grab my calendar link, and if you find super helpful the information you see in the video, go to the description link, and in there will be my calendar link. Schedule a call with me. I'll jump on a Zoom. I'll do the same analysis Mitch does with you, but you can actually give me a symbol and I'll just build a trade live right there. I'm really good at this, so it's very easy for me to just go in and look for opportunity. If not, I'll just show you what I'm working on if you don't have a symbol you're looking at, and I'll go through that whole process with you, and I'll see if it makes sense for us to work together. But for now, go ahead, watch the video again. Mitch is analyzing Tesla, but the same information is good for any symbol you're going to look at. And then meaning the process, I should say, the framework that Mitch is following. Then if you're watching this on social media, I'll have the calendar link somewhere. You can also drop a comment, like for your, if you're watching this on like Instagram or something like that. But if it's on YouTube or I emailed it to you, you'll see the calendar link pretty easily. For now, if you get some good value out of this video too, if you'd also wouldn't mind liking and subscribing to whatever social media feed you're following us on, just tells the algorithm we're worthwhile. All right, so anyway, you guys have a good trading day, trade safe, trade well, and I'll talk to you soon.
All right, so let's take a look at Arthy's Tesla chart here. And like I said, I intentionally did not do anything with it because I figured I'll just kind of take a look at it live. So here's what she presented, and it's pretty good. And so one of the things, and so right here, she certainly pointed out right here, there's a rally, a base, and a drop. Okay, and she also pointed out that it's in a downtrend. It's by virtue of the fact that she mentioned that this going long here or buying calls would be a counter trend trade. Well, then obviously she's saying that's in a downtrend. So let's take a look at the big picture again, and let's break this down. And let's start out with the daily chart. Okay. All right, so here's the daily chart. I remember I was actually looking at this a while back when we were way up here. See, this is why politics. This is why you should stay in your lane. Be in politics, be an industrialist, be a visionary. Don't try to be all of them, because this is where you get the trouble. So at any rate, obviously Tesla has taken a major haircut. This is down about what is that? About $150. Sorry, almost $200 from its high of 475. But in terms of the, if we look at the those swing lines again, just in terms of assessing trend. And again, we you can obviously eyeball it, okay? But right here, just in terms of what we talked about earlier, okay? So there's a high, there's a low, there's a lower high, there's a lower low, okay? And so, obviously we're in an official downtrend here, okay? We can also see that we're right here near the upper Bollinger Band is here, and the lower Bollinger Band is there. So we kind of have an idea about that. All right. So this would certainly be this will certainly be presumably a counter trend trade, okay, in the context of the daily chart. Okay. So I believe Arthy was looking at this in the hourly chart, which is fine. And in fact, this is actually the way really you should gauge trend. Um, Look at trend in the time frame that you're charting, but you should also bump it up one time frame, and that kind of gives you the big picture current. So if you're using the daily chart, look for trend both in the daily and the weekly. If you're using the 1 hour chart, then look at trend in both the hourly and the daily is the higher one. Okay. Okay, and that was that concept of the triple screen that I was talking about the other day. So your intermediate time frame is your charting time frame. You have one time frame above that you use for kind of the bigger picture trend, and then one time frame below, and you use that to help refine your chart. In terms of looking for supply and demand levels. Okay, so let's go back to Arthy's chart here. All right, so she's looking below right here. So she's in that area of around 244 to 247. Okay, so let's take a look at that. And so there's some good work in here. Nice. So let's go to the 1 hour. Okay. All right. So first of all, I just want to make sure that because like I said, I always like to see where the Bollinger Band is. I just want to make sure that this thing is actually looking at the daily time frame, and it is. Okay. So as I always mentioned, even though we're looking at a lower time frame, a 60-minute, this is the Bollinger Band that's based on the higher time frame. And I think I showed you guys recently, and I can do it again in another session, how to do that in TradingView. So you can be looking at a chart of one time frame, but your indicator is keyed to another time frame. Okay. So in terms of where we are now, so Arthy was looking in that 241 to 244 region. So she was kind of looking in here somewhere. Okay, so needless to say, I would assume that would be one area of interest. Whoops. Let's see what she was looking at here. Right, so she's looking over here, the 247. Okay, so she's looking at the 247, 244 region. Got it. So there's one. And then I guess one could also, not sure if I'm in love with that. Let's see, what did she have here? Yeah, that's the 244 to 247, and this is the higher one. See, I think in this particular case, I kind of really like that because this is a lot cleaner. Okay, this one it's very wicky, and I'm not really seeing it in the 60. Um, this is one of those I think that if I was going to do it, and this is where I start to get into doing some work here, um, is I would probably drop it down to a 30-minute just to kind of see because I'm not really feeling like this is very clean. It's a rally base rally. Okay, this is kind of it's kind of wiki. Like I said, if you really, it's kind of messy here. I'm just curious to see what this thing looks like here. See, it's interesting because now that notice what right here was the second that you change the time frame, notice all of a sudden this becomes it becomes a lot cleaner. Okay, just curious here. TradingView actually offers the 45-minute time frame as a kind of a standard time frame. So I've actually started to use that. I never really used to use that, but because TradingView seems to offer it, um, I've started to use that now. So when you do that, kind of end up with this. It's almost this kind of level on a level thing. So let me just change the color of this. So we know what pairs of lines we're dealing with. Okay. Okay. Incidentally, there is this little area here, but I think this would be kind of a this would be kind of aggressive, particularly because this Tesla's been very volatile for obvious reasons, and so I would be a little hesitant to kind of just on a pullback here, unless I just think this would be kind of taking a chance here, particularly when you got this gap, when you have all this empty space below here. So I think this is actually it's sensible just to be patient and wait for this thing to come back here. Um, so in terms of looking at this thing, one could actually take this here, and the reason for this is there's a couple of things going on here. Um, First of all, it is at the origin of the gap, okay, and it's not an earnings gap. So this is just a gap, okay. But there also, if you notice, it precedes this area of kind of what you can think of as kind of busted resistance here, and that's one of the things actually that's kind of another odds enhancer is when price kind of drives through a prior wall. And you could think of either supply or tested supply or resistance as kind of a prior wall. Okay. And you can see right there, price came up. It's kind of a sloppy rally, base drop. Price came back, successfully knocked down price again. Then right here it got to the doorstep, and then it just blew through everything. Okay. So that's generally an odds enhancer. So, if you have something that precedes that, that's usually a good element. Okay, so there's that. Okay, now in terms of the swing, and again I talked about this a couple of minutes ago, but here's a good example of it. So here's the swing that goes from here to there, and you can see clearly we're going to be in the lower third on that. And that's the other thing. This thing over here in the bigger picture is kind of in the upper third of that is in the upper third of that swing. So if we draw that out again, just waiting for my system to cooperate here. Well, that's a bummer. All right. Up there we go. Okay. So you can see, no, all right, I didn't put the measures on, but that's the lower third, that's the upper third. Okay, there's the middle, and there's your midpoint. So you can see we're clearly in the lower third of our swing there. So, I like all of that. Okay. So I think one could actually take this this upper demand zone. I think is pretty reasonable. Interestingly, and I guess this is going to differ. I think very slightly. I think from Arthy's, and I think it's just because I'm using a slightly different time frame. But I mean, one could certainly use this. It's perfectly good. So that's actually some good work here. Um, so in terms of mapping this out, just make sure I'm actually you see I drew these lines sloppily because you'll notice right there, you see, and this is actually something you should always be careful of. Make sure that you actually, take into account all of your wicks and everything. Incidentally, let me show you guys something.